everyone, and welcome to this week's version of Mish's Market Minute. I am your host, Mish Schneider. And as always, I'd like to thank StockCharts TV for hosting me. And also, of course, we have a very full schedule here today. Want to pack a lot into this half an hour. Fresh look at emerging markets. This is something that I covered a long time ago. One of my first videos, actually, that I did with StockCharts. And it turned out with some really good ideas. And the reason why is because at this point now, the emerging market sector and a lot of the country ETFs are actually lagging behind the US, even though the US has just had a recent sell-off and correction because of the virus and because of trade issues with China merging once again. They've been actually harder hit. And so we know that this is a market that is very forward thinking. So as a result, what we'd like to do is prepare for that situation when the emerging markets come back. And as always, I like to give you all the symbols. You can see how ambitious I am. We have about 25 symbols here, so hopefully we can get to them all. But we're covering all regions of the world, and we are also not doing this in any particular order. Okay, so let's start with actually the ETF for emerging markets, which is EEM. And what's so interesting is how momentum really gives us such a good clue, because I've talked about this with you week after week. As this was just coming off of highs, the 50-day moving average on real motion started to break down before the price did. And excuse me. And as we know, that then sent the prices flying down. And of course, we've even broken the 200-day moving average on real motion, but the 200-day moving average on the price is all the way here. So what we have to look for now is a couple of things. We don't necessarily have to wait for the momentum to get back over the 200, but you want to see the momentum to stabilize a little bit. And you want to make sure it's not a fake out, which is why, like you can see here, looked like the momentum was coming back. We went right to the 50-day moving average and then failed again. So now we're in a situation where we have to look at other parameters. And remember that I've talked to you a lot about the new 60+ day low. So if you look at the date here, this is 60 days later when it made a new low on Thursday, March 25th. And now what you want to see here is a close over so far Thursday's high, which would be 52.07. Now, right now it's trading at 52.51. So I would keep an eye on this. And also what's interesting is, did it fill the gap? The low here was 52.86. The high here is 52.83. It didn't. So sometimes I like to use a second confirmation when I see the momentum, it is starting to hold, which is a good thing, but is it going to really hold up is the bigger thing. So I would say at this point, either you would buy it over 52.83, 52.86 because it fills the gap, or if you can get some kind of dip closer to 52.07, then at least you have a good risk to under 51.50, and I would play it that tight. It either holds up or we're gone. EWT, which is Taiwan, I like a little bit better here, even though we've got the situation where this is holding the 200-day, it's still below the 50 and the price is above the 50. The point is right now is that if you look at the leadership, which was very weak in the EAM, if you look at the leadership in Taiwan, it's starting to take back over the benchmark. So that's a good thing. And here we are after some consolidation, clearing back over the 50-day moving average. So I would give this a little bit more patience, but if it can get a second close on, let's say Monday, over 58.34, then you would have a pretty good risk, probably give it a little bit more room down to around 57 and change. So that would actually be a decent amount of risk versus reward, because obviously if this can clear through 60, it should continue to go. So I like EWT, and I would certainly be keeping my eye on it, and it's one of those that I'm writing down. Next one is EWY, which is South Korea. Now, South Korea, and from a geopolitical standpoint, actually right now may have other issues that it has to contend with because of the fact that North Korea actually filed off a couple of missiles. No damage was done, but North Korea is doing its thing, flexing its muscle. But sometimes things is already in the news, so you have to be somewhat aware of that. And this doesn't really trade very much. Look at the dots here. That means the volume is super low. But nonetheless, what is interesting is that if we can get through the momentum here and get back over the 50-day moving average, maybe that would be a good sign. Right now, you look like 85.60 would be the number that has to hold and probably get through this 90.72. However, note the slope here is somewhat negative. So on the flip side, if things started to sell off in all the markets again, you could actually be a seller under 85.63, risk to about 90, and see if you can get a move down to that 200-day moving average, just like the momentum is indicating that it's already broke. So you got an either or situation. Some of these are hard to borrow, which means you can't short them, but the idea of it is good in terms of just overall strategy. Now, I happen to be pretty bullish in Greece, and I've been watching it. Of course, I've been also hesitating on getting involved. We made this peak here and we've come off, but look at the momentum here. It's actually back above the 50 after breaking it on this way down, and it's starting to show a little bit signs of leadership here. So after the sell-off in the US, this actually held up better than most, and you've got a nice risk point at 25. And so right now, I would think that if this can close this week that I'm talking to you over 26, you could risk $1 to under 25, which means now you'd be looking for 28. And that's not so crazy because if you look back here, it was trading at these levels all the way back before this was really basically December 2019, January 2020. So I like Greece very, very much. That's another one that I've been, like I said, hesitating, but I'm writing it down for now. Next one is EWS, which is Singapore. So another Asian country. Momentum is now back over the 50, showing leadership here against the benchmark, and had a nice little gap here, not to new all-time highs because it's been higher back here, but at least a gap over all this work. So really today, as I'm speaking to you, is the day that you might want to get involved with this, especially if it closes over this 23.12. And then in terms of risk, I would probably use the low here of under 22.77. So you want to talk about a tight risk. That's a tight risk. But this is actually going in the right direction. EWW was one that we did very well on. We have absolutely no position on right now. This is Mexico. I told you I'm jumping around the world here. And in Mexico right now, this ETF went all the way back down. We were in here, we got out, weren't really paying attention, should have, because we had a good opportunity to get in here. But now it sold off to the 50-day moving average, and today it's gapped up. So I would like to see what happens here with momentum because it's holding the 50, which has a neutral slope, but you could see the momentum is still However, it also is outperforming the benchmark. So you got some good and you got some bad. So you'd have to be kind of nimble on this. I might want to give this one more day. I'd almost rather prefer to get in either closer to 43, today's low, which is 43.50, which is where it's trading as I'm talking to you, or closer to yesterday's high. So somewhere between 43.45 and 43.50 to see if that can hold. If so, then really you can risk pretty tight. You can risk to, let's say, under 42 to see if this thing has more legs. And again, this was trading all the way up here around 47.48 back at about, well, actually like a year ago or more. Mexico looks good to me for sure. Thailand is another one. Not quite over the 50, not quite showing leadership, but holding the 50 here. So I might be a little bit more patient, but if we can get some forward momentum in here, again, a very clean risk to underneath. I'd give it some room under 80 to see if this thing can go higher. So far, some of these emerging markets are looking really interesting to me. Now we're going to move again to India. And India actually has two ETFs. This one is the India Fund, IFN, and then there's INDA, which I'll show you in a moment. I would probably be cautious here because look at this. This is coming off on momentum and it's also lost its leadership as it's heading towards the 50-day moving average. So I would almost prefer now to see what happens here. If it actually breaks down under the 50, maybe if it gets closer to 20, and if we can see some kind of stability that happens in momentum. If you look at the low of the momentum here, when it touched the 50, even though it was below, it rallied from that point, and you had to wait a couple of days to see it go. It was kind of choppy on terms of the momentum versus price. So we don't necessarily have to wait for this to clear the 50, but if it holds, which is where it's sitting right now, the momentum low from that particular day as the price is higher, you want to at least see it maybe get back through this Bollinger Band here in momentum, and that would give me a little bit more of a feeling that perhaps India is going to rally again. And then here is INDA, the other one. Same thing. Look at this. Momentum has gotten really weak. It's sitting on the 200, no leadership whatsoever as it's trading under the 50-day moving average. So India could be an opportunity closer to 40 maybe, but again, you want to see the momentum. EWA is Australia. Now, Australia is having its own host of problems when it comes to China. And so it hasn't really reflected much in the ETF here, but you can see the momentum is down sitting on the 200 and the leadership now is starting to show a little bit more signs of strength, but it's trading right down to the well, right back up to the 50-day moving average, and this is not a new 60-day low or anything. So maybe if this momentum can gain a little bit and the leadership can continue going in this direction, you get two closes over the 50-day moving average at 22. No, 50-day moving average is at 25, let's call it 25. You get two closes over 25, then you could probably risk to under 24.40. Again, another tight risk, but these don't move that much. Okay, the next one is EWU, and that's England. Now, this one's particularly interesting because England is still actually on lockdown. And as a result of being on lockdown, it actually has held up pretty well. So talk about forward thinking. So we want to see the momentum come back. We want to see the momentum clear this 50-day moving average and some leadership here. But we're hanging on to the 50 here, so that's a good sign. So I'd keep an eye on this too. And maybe if we can get back over, say, 31.50, I would probably use a pretty tight risk to under this low of 30.50. So maybe give it about $1. They're expected to open up as of June, as far as I've heard. Hong Kong also having some issues politically. Look at this island top here. I mean, that's a classic. You don't see that very often on charts. It's very rare to see a clean island bottom or a clean island top. And for those of you who don't know, an island means a new all-time high or a new all-time low that gaps up and then gaps down, leaving literally an island surrounded by water, in this case, space. So after having that, we've made a 10% move lower, which is basically the first start of what you would expect. Momentum looks like it's trying to hold back, and so is this. So this would be another one potentially to watch for a phase change back over the 50-day moving average, and then you can use your risk under 25.85 or the low of this day. All these ETFs should be traded with pretty either small positions or far stops, because you can see when you see these sort of dots, it means that you've got a situation here where you are really very low volume. Okay, so the next one is South Africa. And in South Africa, you've got a situation here where you've already taken out the 50. Now, South Africa is very, very tied to commodities, and especially agricultural commodities and some mining as well. So you're starting to see a little bit of leadership here. Momentum is coming back as we've gapped back over this 50-day moving average, but I'd want to give this a second day to prove that it can hold. And then I would probably say not a bad one to go into and you have a good clean stop. Let's give it a little room and say under 45.81 would be your risk. Okay, next one here is EWQ. This is France, also closed, but also at some point expecting to open. Momentum's not great while it sits above the 50, so I probably wouldn't touch it at this point, but I keep my eye on the momentum to see if at least we can get back over the Bollinger Band here. And the performance, of course, against the leadership has been So right now, you really want to see this hold the 50-day moving average of 34.15. Maybe I'd give it a little bit more time. Maybe I'd even wait for this to clear 35. At that point, the momentum could change. But this is another one that certainly worth keeping on the radar. Now I have SPY here. So why would I give you SPY when we're in when this is not an emerging market? Well, that's because I just wanted you to see the comparison here. So the SPY, where everything else was breaking down under the 50, and when I say everything else, I mean the Qs, and also the Russells, this has held the 50. So the United States, when I say right now is literally outperforming, I mean it, except for one little thing. See this momentum here? I think this momentum looks pretty awful. So I would be concerned. And in fact, I think the emerging markets, which have already been hit, could actually play some catch up while the SPY doesn't necessarily have to break down, but I don't see it going to new all-time highs until I see better momentum. So that's something else to keep in your mind. Now, I think I covered EWJ already. Japan? No, I did not. EWJ. All right, this is another one. Momentum starting to come back, but not great. And we have here a situation where it needs to give me a little bit more sign of momentum, but at the same time, it's back over the 50. So with something like this, it really needs to hold 67, and we need a second close over the 69.50 or the 50-day moving average. And Japan has been doing interesting things. I mean, considering it'd been underwater for like 35 years, it's good to see it coming back. I'm not sure why I lost my leadership here on the SPY against the SPY, but okay, whatever. Right now, you see that we have this flatlining on the momentum in terms of Spain, and the negative slope in the 50 with the gap over makes me somewhat suspect. So at this point now, I don't think I would necessarily call this one of my favorite ones, but you can see all of these emerging markets are starting to do better after being under the 50, with momentum maybe flattening, with United States over the 50, but momentum actually declining. All really good information. EWP is Spain. I just did that. RSX, Russia. Russia's very tied to oil, so I'm kind of surprised this hasn't done better. But you can see here that the momentum is starting to hold up a little bit as it's struggling to get back over the 50, but the slope on the 50 is not great. So in this case, if you were interested in getting involved with Russia, I would wait for this gap to be filled at 25.56. Then I would say, okay, fine. If it's going to fill that gap to 25.56, you can use a tight stop under 24.63, so about $1 to see if this thing has more legs. But again, I'd be keeping a close eye on the oil market with that too. EWG is Germany. Germany also declining momentum with the price above, so we see a divergence. Again, I probably wouldn't do anything at least until I saw the momentum either gain or the price to go back down, test the 50 and prove to me that it can hold. This looks a little bit actually like the United States in terms of that type of setup. EWL is Switzerland, very tied to gold. Last time I covered this, this was doing really well because gold was doing well at that point. Now your momentum again, you've peaked low in momentum, so that's a good thing. We're under the 50 and we're under the 50 here and the 200. But if we can take the momentum out here and also would correspond maybe with the high of this day of 45.08, then perhaps that's also not only a good sign for Switzerland, but a good sign for gold. So next we've got here FXI, China. And as you know, this has definitely had some issues here in that we're back to discussing not only trade war with China and the United States, which is the big surprise of the Biden administration, because people thought that he would be more relaxed about it, number one. And number two is we're also in a situation where a lot of the symbols that are traded in China, like Baidu, for example, and some of the others, are at threat of potentially being delisted in the United States. That would certainly not be a warm fuzzy for China in terms of the ETF. We caught this whole move up and we have done nothing since. So what's interesting to me now is look where it landed, not only on a new 60-day low, and then followed by an inside day sitting on the 200. But if we were going to do this as a reversal pattern, even though it gapped up today, it really needs to close above 46. So the momentum is not great, but maybe leveling off, and we're the leadership. You can see I have the leadership back. And so here's how I would do this. If this closes on Friday, which is the day I'm speaking to you, above 46.03, you have a really good risk to under 45. I'd be gone if that broke. Trying to see if we can get a move back up closer to the 50-day moving average. So that's, you never know what news comes out. All the bad news could be in the market at this point. Next one is EWM. This is Malaysia, another Asian country. And look at this. I mean, this leadership here is just awful. The momentum awful, but at the same time, possibly holding on this zero line right here, as this is under the 50 but above the 200. If you look back on the chart, you have a lot of support really coming back down here from around 26.80, 27. I wouldn't necessarily do anything with this, but it's just interesting information here, because if it breaks down under the 200, but the momentum starts to climb back up, then you could be looking for a fake out breakdown and then for it to return back over that 200-day moving average. Next one is EWZ, that's Brazil. Now, Brazil also had done a nice rally, never quite as strong as China or some of Mexico or some of the other ones I just showed you. But now it becomes more interesting to me because of the crop situation, and the momentum is actually trying to clear the 200 as this is just sitting on the 200 and the leadership is leveling out. So that makes me kind of interested here in Brazil. I would probably wait another day to see what happens here. But if this can actually hold the low that we made this week on Thursday at 31.92, and I would say maybe let's give it to some midpoint here, get back over 34.20, then you have a 220 ATR. I mean, it's 220 risk. I'm saying the ATR, and this is probably bigger, to see if it has the legs to turn around, not only in momentum, but get through this 50-day moving average. So this is another one that I'm going to keep an eye on and make a little note for, that we really want to see this get back over that, what did I say here? 34.20. Okay. All right, couple more left. Now, these are more broad regions as opposed to specific countries. AAXJ is all of Asia, excluding Japan, okay? So now look, this is where China obviously is heavily held in this basket, but momentum is trying here. This is trying leadership here. And more importantly, exactly the same formation I showed you before, in that this is this got a new 60+ day low actually on Thursday, that low at 89.90, and the high was 90.79. So if it closes above 90.80, this would actually be a confirmed reversal pattern, which means you can actually buy it and risk to under 89.90 with a little fudge. But more importantly, it might also indicate on that China one that I showed you that it's possible that things have stabilized and that the lows are in on these Asian countries, and they'd be more interesting as an opportunity to trade. The next region, even though I've shown you Mexico and Brazil, is Latin America, although Brazil's really South America. But nonetheless, what's interesting about this too is you made a new low here and had a reversal pattern. So now when it broke down this week, it didn't take out this low, which is a good sign. So that tells me now that your risk here is 26.18 in ILF. 26.18 plus a little fudge. It has to hold. And the momentum, it looks like at least might have stopped the bleed. So I'd give this another day, and maybe if we can get a move over 27.50, that would be a more interesting way to play even the Brazil or the Mexico. So I'm actually starring this one because I like that one. Just like I mentioned to you in the very beginning, I liked Thailand and I like Greece and South Africa. All right, the last one here is another region, VGK. This is all of Europe. Okay, so considering what's going on in Europe right now, we have a situation here where Europe is underneath the 50 on momentum, not showing leadership, but above the 50 on the actual price. So again, do we have to wait for the 50 to clear? No, we just would at least like to see the Bollinger Band clear here and this to continue to hold above yesterday's low, 61.78. So this is another one to keep your eye on to just help you determine to see whether or not we're looking at the whole European Union and EAM, the emerging markets, stabilize here. And again, we really want to see the United States also hang on tough to its recent gains after coming back from a correction. And so my last point to you is this has absolutely nothing to do. I showed you SPY, but one of the best ways right now to gauge what's going to happen in the US is through IWM, which if it closes under 22295, closes under last week's low. And that could mean that we're going to see a situation where if we break down on these lows, we could see a much harder correction. So I would be cautious all around, but nonetheless, now you're very well prepared, especially with a couple of exceptions, because it is possible for the Latin American countries to outperform, and of course, some of these Asian countries to outperform, and certainly Greece, I've seen it outperform. Okay, I hope this helps. Thank you so much for watching. You all have a great weekend. Happy day, and bye for now.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.